What is up, everybody? Happy Sunday, and welcome back to the world's greatest weekly watch list show presented by Gold Rush. All right, so a few names right now. The market, I think, is in flux. There's a lot, a lot that can happen, especially with the results of Jackson Hole coming out. I believe they said that they're gonna go ahead and restart some hikes, which overall long term are healthy for the economy, but short term, I don't think that the investors like the sound and feel of that. So it looks like we might work our way into trying to form some new lower highs and lower lows on the market. But let's see. I don't want to count my eggs before they hatch, right? Or count my chickens before they hatch, rather. I'm looking at SPX on your screen right now, and there's just a couple of observations. So we're currently underneath the 50-day moving average, that red line right there. We opened up and kind of rejected it on Thursday and fell pretty hard right into the decision day for Friday for Jackson Hole. The other thing that I want to mention is we're in a broadening formation facing down, touching that 50, hitting the top of the formation and working our way down. So I think that we're going to target this 100-day moving average here at 43.13-ish. Also kind of where this bounce was here. And ultimately, I think we might even get to where this consolidation is here. Right, that's what ultimately looks like might happen. But really depending on what occurs within the rest of the market. Real quick, we have a lot of names, a lot of smaller companies, but still very large companies reporting. I say smaller companies, not Apple, Microsoft, Google, Tesla, not these massive market cap companies, but like some medium market cap companies, right? We have Neo reporting on Tuesday morning. We have Best Buy Tuesday morning. We have Big Lots. We have HP reporting Tuesday afternoon. We have Box Tuesday afternoon, Hewlett Packard. And then on Wednesday after the close, we have CrowdStrike. We have Salesforce, Okta, Chewy. So CrowdStrike, Salesforce, and Okta are a good measure of like company growth, right? Because a lot of companies have turned to digital solutions. And so Salesforce is a big one, right? Okta's huge. And CrowdStrike is some people's preferred vendor. So what I mean by, they're good indicators is like, for example, if a company's growing, then it might increase the licenses it has on Salesforce, for example. It might increase the users using its Okta license, for example. It might increase the instances on CrowdStrike. You need to pay more money for CrowdStrike. So like, those are going to be good indicators of what the economy looks like in terms of job growth. From a more holistic perspective, not necessarily like in your face, but like more like, more nuanced. So I like to pay attention to those earnings, see how they go. We also have Five Below, which is another good indicator of how the economy is doing, how the retail economy is doing. Because Five Below, everybody can afford to go there. So if their sales are down, then that's very telling, right? Similar to like DKS had really bad results, even though they have really good sales sometimes. So it's just kind of telling where things are going. Then we have Dollar General on Thursday. We have UBS on Thursday, Ollie's, we have Broadcom, Lululemon, MongoDB. We have SentinelOne, Dell and VMware, PagerDuty, right? So a lot of tech names, a lot of like tech services reporting earnings this week. So those are going to be interesting results. I don't think there's anything in there that'll necessarily move the market, right? I don't really see. I mean, the only one that I see that might be able to move the market is perhaps UBS will be a name that moves the market, only because they're very large. Also, BMO reports on Tuesday before open. That's another one that might give us a particular move in the market. So those are some names to watch. So let's see. I have about 13 or so names, right? So I'll just get quickly through the indices, and then I'll go straight into it. QQQ, similar to XPX, both rejected that 50-day moving average, right? Rejected the 50-day right here. We're sitting right on top of a volume gap. So if we magnetize our way down back to 355, underneath 350, where this node is here, underneath that, we could target this 100-day moving average, right where that consolidation is. So it's pretty much similar to what's going on with SPX, right? We have kind of a, there's not much going on here. For here, it's straight down, straight down to the 200, 100 day, and then right into that consolidation. For QQQ, we have a little bit of consolidation first, and then the 100 day, right? So similar setup, just in a different order. But I think there's more downside. Same thing here. We kind of have a broadening formation down, right? We have this structure here, where price is just exploring how far down it can go in forming lower highs and lower lows within the broadening. So I think the ultimate target for this again is going to be the 100 day for both of them. So we'll see what happens. I'm not going to force anything, and you shouldn't either. Next one is XLE. XLE is currently in a cup and handle vibe, right? We had it tapped on this level at 76 and change a bunch of times, and it's finally worked its way up, broke the downtrend over here, and is now forming sort of a cup and handle right into a very concentrated area of volume. So this is a good spot for XLE to try to break out of this short term, and by short term I mean like days, right? Just a few days of lower highs and lower lows, right within this little handle here. So we'll see if price continues to go to the upside, break above that 20-day moving average, and then come back to 88.77, and then from there work its way up to 89.54, and then from there break out above $90. So that's what I'm looking at for XLE, as long as nothing major changes within the energy market, right? Let's see what else. XLF. Okay, XLF is one of my names for tonight, but it's an indice, so I'm going to go ahead and discuss it now. So we have kind of a cup and handle that formed here, and then it broke down and retraced pretty heavily into this move, right? So it's come back to maybe less than 50% of the move, or a little bit more than 50% of the move. It's underneath the 50-day and it's underneath the 200-day. Right. So for me, I think it's bearish. I think that maybe it wants to come back and because if you look over here, you got 8 green candles with a small tiny doji in the middle of it, right? So 8 green candles in this area, and no selling pressure here. I think that sellers want to try to retest some of this level and try to bring it back down. For some reason, it's telling me, my gut's telling me that we have some demand here that's unmet. And so you might want to come back down to this level and try to redo that demand. I think that XLF is going to work its way down into this 100-day moving average. I think that UBS and BMO are going to be two catalysts for XLF to work its way down back into this 100-day moving average here. So that's what I'll be watching. And I mean, listen, it could be 2 candlesticks, right? You see it consolidated here in a show of strength underneath the 200-day moving average. We did open and form a strong move to break through the 200-day and through the 50-day, but rejected. Sellers took control, brought it way back down, and it closed lower than it opened. The next day, we kind of gapped up and then rejected the 200-day, formed a doji. So if we don't break over this 200-day tomorrow, we might fall pretty hard. And I think that we're going to work our way down into this 33.43 level, right where the 100-day is going to meet it at. So that's what I'm looking at for XLF. Let me go ahead and cross that off my list. Okay. All right, so I'm going to do 2 of each, upside and downside. So let's start with CCJ. CCJ is showing lots and lots of strength, forming all new highs. I want to see where these levels are at. Are these all-time highs? Yeah, these are all-time highs. So CCJ, actually, let's go to the monthly to make sure. Oh, this is not all-time high. I figured, yeah. So we're making new highs as of recently, right? Like, and what I mean by that is like within the past like 10 years. The last time we were this high was back here in 2011, right? So last time we were here was about 12 years ago. Go back to the daily. So CCJ kind of formed this massive wedge and found a way to break through, make a new high, come back, retest some of the previous resistance here, and then bounce and work its way up. And so CCJ looks like it just made, and let me just go ahead and zoom in on it a little bit more to make sure. The high was 36.53. Over here was 36.48. So we did make a new high on Friday. I like this because it's like a strong move between these 2 candlesticks, and then some sideways action. A potential for it to fail, but then buyers brought it right back up into the zone, right? And towards the top of the zone. Not only making a new high, but bringing it to the top of this consolidated zone here. The final target for CCJ on this measured move from this low of 29.17 to the high of 35.24 right? Pull back, a bunch of Fibonacci action there. The final move for this will be 38.98. So that's what I'm looking at. Maybe not this week, maybe not even this month, right? We might have, well, this month is over in just about a week. So I would say by the end of September, we might be well within the $38 level. So that's what I'll be watching for CCJ for the upside. Next one is Tesla. I think that there's there's upside on Tesla based on the fact that we fell underneath the 100-day moving average. We gapped up above it, tested it, and then bounced. We gapped into the next day. We pulled back, right? Fell pretty hard. Same thing next day, gapped up, pulled back. And now we're slowly rounding out the bottom. You see how these lows got a little bit lower and now they're getting a little bit higher. I think that we're going to try to test this 200-day at some point. And if we do break above the 200-day, I think the magnet is going to be this 247-ish, right? Right where all this volume is here. The reason why I'm bullish is just because like you can basically measure the move here and see how strong it went up, and it didn't pull back more than 50% of that move, right? It pulled back and it held, and it came and pulled back and held again. So I think there's a continuation move to the upside, even at least until it's 250. I don't think it's going to go all the way up to the 50-day just yet, right? I don't think it's going to hit that 50-day just yet, but definitely we can hit 250 by this week. So that's what I'll be looking for with Tesla. Let's do some downside. Costco. Costco, we hit this very strong double top here. If you remember, Costco has been wedging for months and months and months and months and months, right? Just long time forming these lower highs and higher lows, right? Consolidating, and then we had this breakout move. We did have a nice rising wedge which broke down and then kind of failed and continued to work its way up. And then we had the double top, right? This double top is bringing us straight down through the 20-day into the 50-day. We formed the bear flag underneath the 50-day. These stocks, when they get under their 50-day, they either want to get above it right away, or they're gonna try to retest some of the other moving averages. Now, with Costco, I don't think it's such a bad idea to go back to the 200-day, only because, if you look at all these moving averages, they were over here, back here in like 2022, they were separated. They were very far from one another. And then as you get over here into like the beginning of 2023, you see how tight they are, right? So we did achieve some separation here. I'd like for it to pull back into the 100-day at least. I'd love for it to pull back into the 200-day where the previous resistance was, right around here, at 510 or so. Pull back there, form some volume, and then get some confidence, right? Get some, do you get some, what's the word I'm looking for? Some conviction, right? Pull back hard, and then like, I want to see buyers step in and bring it and rip right through this double top here. So I don't like when things rip and just rip and rip and rip. I like things to pull back and rediscover their price, right? So what I love about Costco, let's look at the 1 hour. Now we did have that bear flag that kind of broke down, right? We had this move here with the flag that broke down. I see another very strong move to the downside. I see buyers did defend this area here, but I want to see kind of price work its way back into this area. Let me just reposition this there. I want to see price work its way back into this area and fall. I think it's going to fall pretty hard, and I think it's going to target that 100-day moving average. So it might be like a 1 or 2 day move into 520 or so. So that's what I'm looking for with Costco. And again, that's going to be with the support of the market, right? A green massive market isn't going to give Costco a red day. So it might, but we want to see market support. Another one I have for downside is CAT. Now, CAT's it's very unique, and CAT I think made both upside and downside for me. So I'm just gonna rip it on both, right? So CAT sitting here at this support level where it's bounced a couple of times in the past few days. It pretty much spent all week at this level. I wanted it for puts, but it didn't break through the level. I wanted it to fill this gap to the downside. I still wanted to fill the gap to the downside. If you do the 2-day chart, it's just strong move to the downside, right? Strong move to the downside, and then a little bit of a bounce. And I want to see if it takes out the high of the day, then now we can try to test the 20-day, and then from there we can try to test the top of the range. But to me, this looks like a little bit of a bear flag, And I think that there's some strength continuation into the downside into this 50-day moving average, right? Let's go back to the 1 day. So I'm looking for it for sellers to come in and step in and bring this right back down. Now, if you look at the volume, and I know it's a little bit faint, but price is working its way down. And even on this day here, volume was extremely low. I think volume was the lowest it's been since we got that gap up on this little upside bounce. So I think that when some conviction comes in, we do have a nice little volume gap to fill right here, right? What machine is this? What's going on? So I think we break down and fill that gap and go to this 50-day moving average. So that would be the downside play for CAT. Now, we do have a nice clean channel here. Let me let the ambulance pass. So we do have this nice little channel that's forming here, and price is kind of curving into the upside of the channel. So again, I mean, you know, a nice clean break of that candlestick. We can target this one, and then we can get back in this consolidated area here at 285. And again, if we break down, then, you know, I want to see it break this level with conviction. Did it touch that on low of day? Let's see. Low of day was 268.83, and we got 268.80, so just 3 cents shy. And then underneath that, we got a little bit of a gap into 265, and then underneath that, we got the 50-day right here at 261 and change. So that's what I'll be looking at for CAT. I think it works well in both directions, especially after 5 days of consolidation, right? All these candlesticks, 1, 2, 3, 4, right? Friday, Thursday, Wednesday, Tuesday, all fit within the Monday candlestick. So once we break the range of that candlestick, then I think that things are going to follow through. Let's see. All right, let's go back to upside. Dropbox. I like Dropbox because it is holding that 50-day moving average. Let's go to the 1 hour. It's holding that 50-day moving average. Now, what I want to show you on the 1 hour is, you know, we did have this falling wedge, broke up into the next couple of days, and then formed kind of a double top, came back down, and then opened up. This is the most important part. It opened up underneath the 50-day moving average, but then it worked its way into the top of that moving average. It opened up and ripped to go up to the top of that moving average and to climb back above it. And then we came back and retested it once, came back next day twice, and here we are again, you know, 3 and 4 times into Thursday and Friday. So I think that testing it so many times gives us the opportunity to say, okay, you know, we've tried to break down underneath that moving average. We couldn't, so now the next direction to go is up, right? That's how these things work. They test these levels, and if they can't get what they want, they just go in the exact opposite direction. So I want to see it, since it's tested the 50-day so many times in the past 4 or 5 days, 6 days, I want to see it rip above this level here and try to fill this there's a tiny little gap right here, 27.81, and then from there I want to see it go back to this consolidated area here at around 28.25ish, right here, right where all this price action is, and then see what happens from there, right? That's going to be the target for this move, and see what happens from there. It's either going to rip through or it's going to fail. And if it fails, it'll come back down and try to find maybe support in this area or something. But I want to see it break above 27.43, target $28 next 2 days for Dropbox. Next one is Boeing. Let's go to daily. The reason why I like Boeing, I actually love this chart. Now, the reason why I like this chart is there's a few reasons. All right, so we had this channel that we broke out of, came back, retested some of the previous levels of resistance, bounced again, made a new high, and then gapped, right, on earnings. Now, the market hasn't really supported a continued move to the upside. You see all the sell pressure sitting on all these candlesticks. Price came right back down, bounced off the 50-day, and then fell hard through the 50-day, but then buyers came and stepped in and brought it right back up. Now, we did inform a bullish engulfing. However, this is a very, very bullish candle. Hold on, let me just zoom in on it. This is an extremely bullish candle. The reason why is because we opened down here, fell hard into that 100-day moving average, where all this volume is, and buyers stepped in and brought it all the way back up and almost engulfed this candlestick. So I think that there's some strength there. Let's go to the 1 hour. Lots of strength in Boeing. You know, it came down pretty hard at open, and then buyers stepped in and brought it and ripped it up, made a new high of day. Some people took profit at the 50-day moving average, and then price continued to work its way up. And even after I was just kind of consolidating there. Now I want to see it break above this level here, and then I want to see it work its way up into 230. Right? Those are the two levels that I'm looking at for Boeing. Above 230, we could target that 20-day moving average, which might be at 230 depending on how long it takes for Boeing to rip. Right? It might just go sideways. We'll see. But I like it for those two levels. I want to see it into this gap right here. That's the main play for this, right? Into this gap, and then maybe form some volume against this 230 level for Boeing. Let's go back to downside. I got Marvell. I'm usually very bullish on Marvell, but it did not hold the support level that I needed it to hold, which was over here, right? This 57-ish or $58, whatever it is. It didn't hold that support level. You see price discovery occurred all up and down within this box. It did start channeling down and making kind of lower lows, which is still fine, whatever, no big deal, right? It worked its way up into the 50-day moving average. It fell, it kind of sold off right at the 50-day here. And the next day it gapped up on the open on Thursday. And immediately bearish engulfing. Anyone who was trading on Thursday knew that. Thursday was one of those days that you could have just bought something and walked away from your screen and came back at market close and been super profitable, right? So there were some puts that went like 10,000%, some XPS plays that went like 10,000%. The ones that we played at, I think it went like must have been like 400 or 500%. I didn't do the math on it, but actually let me see if I have it somewhere. Actually doesn't matter, but big strong move to the downside, market wide. And then so this was a very, very strong move for Marvell because this is the first time that it was back above the 50-day since since back here when the 50-day caught back up to price, because after the gap up, everything gets extended after the gap up, right? So it's very healthy for it to go sideways the way that it did. And then once the 50-day caught up, buyers try to keep it above. That one day they tried keeping it above, and then it failed, and then it bounced a bunch. And then the next time that it was above that 50-day, which was here, there was like nowhere in sight for it to hold on to, right? And then it fell hard, and it is now hanging currently at the 100-day moving average. So I think that if we get another strong negative day in tech, then there is a potential for this small gap to fill right here. Do it from there to there. Right? We got a nice strong move to the downside. No man's land. This is what happens when there's no volume. You get these big gaps. So we got a nice strong move to the downside. If it cannot hold this level, if tech gives us a red day, based on Nvidia, based on LRCX, etc., then there's a nice possibility for this to give us $50. $3 move to the downside. Maybe not in one day, but maybe in a couple of days, right? Maybe in 2 or 3 days. So that's what I'll be looking for with Marvell. The next downside play I have is X, another one that I'm usually very bullish on. However, X, now I did measure the move of this candlestick here from bottom to top to get these Fibonacci levels, these golden Fibonacci levels in red, as well as the final target up here at 35.28. And I was looking at X. X looked very, very strong into the week. We had it on our watch list last week for an upside move, right? This was last Friday. Monday it opened up and ripped through the highs, and it almost tested the high of this day here, which is the top of the range at 32.52, but then failed and then undid all of Friday's price or all of Monday's price action, and then kind of went flat. Now, the way it looks to me, I mean, we are sitting on top of this volume here, but I think that if we do get a nice red day, again, we're extended by the moving averages, so we can't really count on them right now. But if we do get a nice red day, I think that, and we've already tested the top of the range and failed to break it, I think that it's possible for us to come back and test the bottom of this range, right? Back to $28. So I think with a nice supportive market, and then you see like the lower highs have failed now, right? We now have, and it's still technically a higher low. It's technically still a higher low, but we broke this trend line here and are forming lower highs and lower lows within the daily chart, right? We have this high, this low, this high, this low, this high, this low, this high, this low. It just progressively gets lower and lower. So failed to break the top of the range. Let's see if we can test the bottom of the range. And it's just that simple, nothing more to it. for X. Let's go back to the upside. I have DoorDash. The reason I like DoorDash is because I believe it was the 1 hour on this. Was it, or am I bugging? I might be bugging. All right, well, we have this level here at 75.27 that we've painted from, I think that's a Fibonacci level, if I'm not mistaken. Yeah, that's a fib level. Okay. So this is a very, very old fib level. I think I drew it on the weekly. I'm not sure where I drew it. But anyway, I like it to the upside. Let's go back to that weekly. I like it to the upside because we have a nice, slow, gradual, strong move that progressively gets a little bit more aggressive especially once it rips above this 68.52 level. It kind of just strong, like back to back, was at 9 weeks of higher highs and higher lows, and then it finally found some resistance at the 1618 Fibonacci, which is, like, how convenient is that, right? I think I measured this candlestick right here, and that's where I got these numbers. But how convenient is it that Fibonacci comes in again to give you the final target? Anyway, I like how it pulled back, and it's like, just looking at the price action on it, let me just zoom in on it so we can see a little bit more clearly. You spend a certain amount of time on charts, and you start to, like, just know the behavior of the candlesticks. And you get to the point where one day you don't even need moving averages or studies or volume. You just look at candles and it tells you enough, right? So nice, strong, bearish engulfing candlestick on a weekly. Strong move, continuation to the downside, and now you see a little bit of dojis forming, some indecision on top and bottom off of that 50-day, and now we're underneath the 50-day here, but we're forming a doji. You can see price slowly decelerating, right? Looks like it kind of wants to turn around on the weekly. Let's go to the daily. Looking at the daily, we kind of consolidated on that 50-day a couple days, fell hard on this day, and then just went sideways pretty much all of last week. We're within the range of Monday's candlestick of last week. And we put in a strong day on Friday. Not very convinced on the volume. However, I think that if we get above the current area where we are now at $78, we can pop into this $80.30 mark for the 20-day and the 50-day to kind of meet there. Maybe go sideways on it a couple more days, just like we did there, and then pop into this 85.61 level within the next couple days. I do like how it's rounding out. I like how buyer stepped in here once again and brought it up. So I want to see a continuation there. Nice and simple. Next one is Google. Google doesn't look beautiful on the daily, but it looks very nice in the weekly. So we've been struggling with this range for weeks now, right? This upper range here. Let's see, from 100, pretty much 130 and above. We broke through it on this week, fell hard on this week, and then just kind of chopped around for the next 2 weeks. And we tried again on this week. The 20-day moving average finally caught up to us. So let's go back to the daily. The 20-day moving average finally caught up to us, and price loves to magnetize around these moving averages. So I want to see price break into the high of day and then work its way to try to undo some of this volume here, right? There's a little bit of a gap there, so I want to see it undo some of this negative volume here on this day. Work its way into that 132.37. Above that, we got that 133.95, which is a local high for Google. Is this all-time high? I do not believe so. Yeah, it's not all-time high, but it's a local high, a high that we haven't been to in a while, right? And then above that, we can start to target some of these $140 levels or so. But I do like it. I like it where it's pinned at that 20-day moving average. I think with some strength, it can pop into this top of this candlestick at 133.95 within the next 2 days. So I do like Google for this week. Actually, it looks like all the moving averages are still in order. We got the 20-day with the 50-day, 100-day, 200-day. So we like that order, especially if we are bullish. And I think that this is one of the better setups in the market right now. Is Google. The next one is for the downside, AMD. AMD is, somebody's going off outside. AMD is channeling down pretty hard every time it gaps up, and it's just interesting. Like look here. Ever since it gapped up here, right? We had the close here, we had an open higher, and then it fell hard. Same thing over here. We kind of closed here, open higher, fell hard, right? Fell so hard that it set us into a new downtrend. We filled the gap, we bounced, and then over here we closed here, We opened higher, we fell hard. Same thing, opened higher, fell hard. Again, opened higher and fell hard. So I want to see that continuation to the downside. I want to see it work through these levels here at $100 at 97.40 and 93.45. 93.45, we will meet the 200-day moving average on AMD, which we haven't been to since last time we were at it was on March of 2023. So it's good. It's a good time to kind of revisit it, give buyers some value. Good spot to buy. I would buy it here at this level, right? So something to keep in mind. And I'm a shareholder. I hope that they continue to rise, but I'm not gonna be mad if it falls a little bit and gives me a chance to add to my position down here for AMD. You know, it's underneath all the moving averages. The 20s cross through the 50. The 50 looks like it wants to cross. They both look like they want to cross through that 100-day. So it just looks very, very bearish for the next couple of days for AMD. Next one is Amazon. And then I have just like three or four more. We did XLF. Yeah, all right, we have 3 or 4 more. Amazon is another very bearish setup. We did hit the double top. We undid all of this move. We're like, I think we retraced like 70% of the move, just eyeballing it. And we're sitting on that 50-day moving average, just hanging there, right? It looks like we might come back into this level where this all this consolidation is to retest some of these previous resistance levels. And so I think that we're going to break underneath that 50-day and come down into the $129 mark for Amazon. Again, Amazon's another one. I love Amazon, but I think that it's time for it to go a little bit lower, right? We had this nice gap up. We filled the gap, and we're forming lower highs and lower lows, right? Here's your lower low, lower high, lower low, lower high. We even formed the lower low on this candlestick, but I think there's more low to be formed to keep this trend intact. So we'll see what happens with Amazon. I like it to the downside, though. So that's the last of the downside. Let's go to LI, upside. The reason why I like it is because it's consolidating in an area above where there was previous resistance and where there was a previous consolidation. I'm just going to drag this over so you can see what I'm talking about. You know, all price kept stopping at this area. And now it's just sitting above that area on top of the 50-day moving average. And price got tighter on Friday, right? The Friday candlestick was inside of Thursday's range. So there's a potential for this to break to the upside, especially since it's holding that 50. It likes that 50, right, as a true tech company. And I mean, and it's meaningless at the end of the day. You know, we read charts and we're trying to like give reason to why things happen. At the end of the day, I could turn the moving averages off and it doesn't matter. It's just a consolidation here above previous resistance, which is the real play. But we might get a nice little pop through these levels into that 20-day moving average, and maybe even into 42.69 or so, where that volume extension is for LI. Next one is Twilio. Twilio, I believe, was on a 1 hour. If we look at the daily, daily's nice because it's like, you know, rippy move, fell off the 200-day moving average, ripped right through it again, then went sideways a bunch. Get rid of this. So we fell through the 100-day moving average. We bounced off the 200-day here, tried it again, bounced off the 200, tried it again, bounced off the 200. Failed to break that 200-day moving average 3 times that we've checked it in the past couple of days, right? On this day, it opened up below, and as soon as it opened, it ripped right up to the top of it, right? And worked its way up, and then trended upwards. We're back at that 200-day moving average. You see buyers like to keep it above. So we're so close to it that I think that there's good risk reward to the upside. Twilio can get into $63 very quickly. It can rip through all these moving averages very, very quickly. So that's what I'll be watching for Twilio. And it might not do it in 1 day. It might do it in 2 or 3 days. But I think that there's soon you'll see Twilio retest this 50-day moving average. So hopefully we'll be there to catch it when it does. The last one is UPS. UPS on the, is that the hourly? Yes. UPS, let's go to daily real quick for some perspective. Now, the reason why I like UPS where it is currently is because look at where it's sitting. And if you just look across all the way to the left, there's a bunch of consolidation there. And then in this area here, there's a bunch of support there. So we're back at a level of support. The last time we were here, it bounced really hard and then made a nice continuation move. So we are here again. Do buyers like it at this level? Do they want to rip it up to the upside from this level, right? That's the question. So break above. I just wanted to retarget the highs right? That's it. Nothing fancy. Just retarget some of those highs. Let me just zoom in on this so we can see it more clearly. We have 169.32, we have 170.36, we have 171.73. Those are what we're targeting for this week. You know, get me back to 172 at the end of the week, and I'll be very happy with UPS. There's something going on with UPS with the I believe there's a strike, or I believe there was a settlement in the strike. Let's see. Teamsters ratify labor pact with UPS. UPS is one of the most mentioned companies. US is going, union ratified a new 5-year contract with the package delivery giant. So, and it rose 1 share as a result. UPS is no longer, the workers are no longer striking. I don't know how long the strike was. I don't know if it was part of this downside move, but I know that them settling a strike, I know that like corporations aren't keen on working with labor unions, but at the end of the day, you know, no noise in the news is going to be good for UPS to continue what it's doing, especially at this support level. So I want to see a rip to the upside. Now, if UPS does take a turn and does want to go and break down for some reason, for any reason, right, break down right there, then we can come back and test this level here, where I see that it likes to, you know, it tested it once here, came back and tested it again, consolidated on it, and then broke and ripped above it. So I might come back and retest that level at 160, but we'll see. I do like it better to the upside. Let's look at Lulu since they have earnings this week. Now I don't know what the expected move for this is. This chart is always like so strange to me. We did try to fill this. We gapped up. We did try to fill the gap. We got very close to filling it entirely until earnings came and we gapped up again. And we tested the levels. We formed all higher lows and higher highs. Made a little bit of a wedge there. And we recently just broke down that wedge on Thursday. We broke through that wedge. So let me zoom in on this a little bit. So, you know, with earnings, I just don't know what to expect. They have a good product. They're not. It's not like a standard product. It's pretty luxury. I just don't know. I don't know. I'm out of touch with their with the product and the market that Lulu serves and all that stuff. I'm just out of touch, to be honest with you. If we do break down and this turns into like a 3-bar play to the downside, right? Big engulfing bar, small resting bar, doesn't retrace 50%. Continuation move right into that 200-day moving average. That will be what I'm targeting. Right back to that 61% fib from, I believe it was this move. Which move was it? Where did that come from? Yeah, from this gap up. From this gap up. Right into that 61% fib. Actually, no, I think this is an older. Yeah, this is way older. This is like from the COVID low to the all-time high Fibonacci. So it looks like it just kind of, you know, it consolidated a bunch here. And for some perspective, I mean, that's not a far level to go. Back to that 200-day moving average right before earnings, the same way it did last time. So I think that's what the play is going to be. I'm not in love with Lulu contracts because I'd rather play Tesla or something else. Pretty much, you know, Nvidia, anything else that generally gives you a strong direction. Lulu likes to consolidate a bunch in one area and then make a big move, right? Another big move, consolidation, big move, consolidation for a long time, and then maybe I'll get the big move. I just don't think that the premiums. You just really have to catch it on the right day, but I think that there's a nice potential for this to come back down to the 200-day moving average, maybe by Wednesday, and then come Thursday, it might rip everybody's face off and go straight to 400. So we'll see what happens with Lulu. Let's see what else do we have on this list. This list is over. Let's look at Apple real quick. I haven't seen Apple in a while. Yeah, Apple double top, fell hard out of that double top, gap down underneath the 50, tested it, fell hard, and came back to this previous consolidated area. This is what I expect to happen with, with QQQ and with SPX. Same exact thing. Come way back down to this consolidated area and retest it. Not necessarily bounce, but just get to it, right? Get to that area. So we'll see. That's what I'm looking for with SPX and with QQQ. which will dictate what happens with the market. The last piece of news is that I posted on the trade floor is China Evergrande tumbles by 93% in Hong Kong Monday auction after trading resumed. So that's this morning. That's today. That's right now, right? Evergrande, which is a large holder of real estate, they are also very large in the United States market for real estate holdings. And so I would look to see if there's something in like the home builders or like the Home Depot, Lowe's, or Zillow's, right? Things like that. Let's look for some potential, and I'm not going to do it now, but let's look for some potential weakness within those names in the next few days. It's not going to happen immediately. It might happen in a couple of days, a couple of weeks, based on things trickle down. They don't just, one day to the next, right? There also might be some defaults in some banks due to this Evergrande thing. So very interesting, something to keep watch for. But that's it, guys. Thank you so much for joining me tonight. As always, we try to keep it consistent on a Sunday. That way we can be ready on a Monday. And I'm thankful for you guys being here with me. And I will see you all tomorrow morning. Have a great night. Peace.